Thank you for joining us here on a Monday. I'm Marlon Bowling with you, and we are going to be going to the phones to analyze our grain market activity to start things off in this segment here. Let's go to the phones and welcome Mr. Dewey Strickler. Dewey, of course, is with AgWatch Market Advisors, and he is based in Franklin, Kentucky. And Dewey, thank you for joining us here on a Monday as we get things rolling. The grain trade is just getting underway. Let's take a peek here at the early prices here, Dewey, and see what the market is doing. Right now on the corn, March down 3 3/4, just like it was overnight. It's trading at 368 1/4. On the soybean trade, we'll flip the page. Excuse me, and here we have the March down 4 3/4 at 877 1/2. Just like in the corn, similar to what we had overnight. And we'll take a quick peek here at Chicago wheat here on the wheat trade. March down 6 at 473 1/4. All right, Dewey, have at it. What's driving the market lower here this morning?
Well, I think you might well say we got a little bit of a letdown from Friday. That's the first thing. Friday we had some last-minute short covering by the commodity funds here for the month end, just doing a little bit of a window dressing here for the end of the month. That's out of the way, and when you look at things here for the rest of the month in February, we really don't have anything going on until we get into the Ag Outlook forum toward the end of the month, and we get an idea of what insurance values are going to be for crop revenue insurance toward the end of the month. And then, of course, you got your March 31st planting intentions report. So we've got about 4 weeks now before we can really look at any news beginning to filter in.
The good old winter doldrums, I believe they call it. Now, also today I noticed where we have a sharply lower crude oil market once again here, Dewey. Last time I checked, we had West Texas crude that was actually over $1 lower. And also we have the U.S. dollar index down as well. Right now, the March crude is down $1.32. The March U.S. dollar down 430 points at 99.220. Kind of unusual to have them both going in the same direction.
Yeah, it is. The dollar index was up sharply Friday, so I'm not too terribly surprised that we're looking at a little bit of a weakness in the dollar here today. Crude oil down, just as you said, about $1.30 here. Would expect we'll see crude oil still continue to work lower here, probably get down into the $25, $24, $22 range.
Really? Okay, I was just going to ask you if you thought our producers should contemplate maybe locking in some fuel needs here, or if you thought they'd get a better opportunity down the road.
I think you might get a little better opportunity down the road here. We'll just see what comes about.
Okay, I did want to ask you about the soybean trade here. Now, we are getting harvest underway in parts of northern Brazil, and what are you hearing? Any word yet as far as early harvest results yet?
It's a little bit early. A couple of weeks ago, I was hearing like in Mato Grosso, in the areas where they had like the irrigated soybeans, we were looking at yields maybe just a tad disappointing, 5 to 10% below expectations. But then here again, too, you've got the irrigated fields. They certainly capitalized on that moisture we had a few weeks ago. So I think you're going to be looking here. Trade probably is going to be looking at production in South America coming in close to where USDA had it pegged at 100 million tons. There's a few private sources in Brazil are just a little bit below that, though.
All right, so again, not much of a factor to move the market. Let's take a quick peek at the cotton market and see what the cotton is doing here in the early going. Overnight, we were a little bit firmer. We have March cotton now 41 points higher this morning at 61.54. As we get things rolling, we're just 4 points off of our high of the opening session. We're talking with Dewey Strickler of AgWatch Market Advisors in Franklin, Kentucky, and we'll be back in 1 minute. We'll talk a little livestock when we come back. Back with you on the Market Day Report. I'm Marlon Bowling with you, and we're talking right now with Dewey Strickler of AgWatch Market Advisors. He's based in Franklin, Kentucky. All right, Dewey, I'm looking at the numbers that came out from the USDA report last Friday after the markets all closed up, and that was the semi-annual cattle inventory report. There were quite a few numbers out there, and as I scanned down through them, I was telling our viewers and listeners a little bit ago that I believe there were 12 fairly major numbers in that report, and it seemed like 9 of them were higher than the average trade guess. So on the surface, that looks like that would be a bearish factor for the start of the cattle trade today. What do you think about all this?
Well, you would think there would be pretty much a slam dunk that we'll see the cattle market open up lower here. I think the number that sticks out the most is obviously the big number, and that is the all cattle and calves. Came out at 103%, and that was above the highest trade estimate. So it shows that the cattle herd is rebuilding some.
So now, with that in mind, that's all against the backdrop of, on the other side of the coin, we had a cash cattle market that actually got rolling late on Friday. And when it did, we had prices that started out around 135 and ended up at about 138 for a top, and that would be $3 to $4 higher than what we had the week before. How'd that happen?
Well, a couple of things is I'm not sure whether the cash trade came out before or after the report. I'm sure that it came out probably before the report was published. Also, too, you got packers probably were waiting till late in the week, needed to cover some needs, and so they just came out and bit the bullet.
Do you think maybe their backs were against the wall as they realized that that winter storm bearing down on the plains was not going to be a small deal?
I think that had a lot to do with it. They need to get some cattle numbers here.
Interesting. All right. Now, what about on the lean hog side of things? Do you think they're going to be aggressive at continuing to bid up these cash hogs? They didn't gain much on Friday, but this market has been chugging along steadily higher for about almost, a month straight now, I guess.
Yeah, we are seeing that meat supply here expand somewhat here in the hogs, so I don't think that the packers are going to need to chase the cash quite as much here, so I wouldn't be surprised if they don't sort of cool off here a little bit.
Well, the Western Corn Belt hogs were showing on the screen to our viewers at home that they were only 4 cents higher Friday, but they had been showing pretty significant gains. They were at 60.51 in the Western Corn Belt Friday for the average price. Iowa, Minnesota was 60.49. So what do you think is going to give more here, the cash hog trade or the futures prices?
Oh, I think we'll start seeing, of course, we got to keep in mind we do have a big storm that's going to be coming through here, so that'll probably keep the cash supported for a bit, but once it blows over, I'd look for the cash to back off.
All right. Well, Dewey, as always, appreciate you providing some input on the markets as we get things rolling on a Monday. The futures trade will be getting started on the livestock markets in a few minutes. Dewey Strickler with AgWatch Market Advisors in Franklin, Kentucky. I want to take, if I could, a quick peek at our pork carcass cutout values that were published last Friday afternoon from USDA. And there they are right there. Carcass values up just 8 cents. Very quiet trade. Loin market a little lower. Hams were up about $1. There you have it.
Thank you so much, Marlon Bowling.